Well, good morning, good afternoon, good evening, depending on where you're checking in from. And welcome to our year-end wrap-up town hall. As we really didn't have this one on the schedule, we just finished quite a few meetings virtually, of course, in London, in Zurich, and I thought after giving the presentation and the questions that we're seeing from those, that it'd be a good time to just go ahead and do kind of a year-end wrap-up, if you will. It's been a great year, but the last 4 or 5 months have been kind of tough for in the gold market in general, both for the price of gold and the equities pulling back, and of course specifically for ELY gold. And I keep up. I'm not going to go through front to back the presentation today. I'm just going to hit some highlights. I want to share a little bit depth about a couple of the new acquisitions and what we're doing and why we're doing it. So I do keep up this sharing the screen here, so you can see we still have that outperformance chart, and so for most shareholders it has been a good year, but for those shareholders who got in here on the way up, when we made this kind of meteoric rise in May and June, July area, to kind of keep you updated, do a little hand holding here, answer some questions. And our competitors generally don't include us in the slide when they're talking about how they've outperformed in the royalty space this year. But we also like to point out that the only thing that has where we've outperformed the stock price this year is in the value, the net asset value, if you will, of the assets that we've been purchasing. And we are operating different from the other royalty companies you're seeing coming on the scene here. You'll hear a lot of them focusing on current production, and while we have a very good revenue stream that's growing, we are seeing much better value in purchasing royalties out the curve a bit, if you will, where we still see a clear path to production, so that we know that cash flow is coming down the road. But rather than paying 1.5, 2 times net asset value for current production, we're still feeling the best value for our shareholders is building that portfolio, a nice growth profile over the next few years, a bit of a longer term approach, if you will, and still buying assets at a fraction of net asset value, and in some cases, 0.2 to 0.5 times NAV is where we're still targeting. But understanding that NAV calculation is very important, because it is nothing more than a discount of the future cash flows. And we've seen some write-ups here. One analyst that I actually have a lot of respect for, he likes to focus more on that current revenue, and doesn't think that that you can really be purchasing that future revenue, because it may or may not happen. And the truth is that current revenue may or may not happen in the future with a gold mine. A lot of things can happen, but we're just still seeing the value there, and what we are still focused on is that clear path to production. So you see us when we're purchasing things out the curve, it's generally with the top operators. Most of our assets the mines are already built, and we're buying assets around those mines. So that's a big focus for us. So we think that while you are taking a bit more risk in projects needing to be developed, we think that most of our assets have a clear path to that revenue for us. So consequently, you know, with the pullback in our stock now, we're trading at probably one of the lowest multiples of a net asset value, especially now with a lot of the new companies on the scene. You have a lot harder time figuring the net asset value. These comparisons that are done here come from Refinitiv, which is a very reliable source, takes the consensus of all the analysts covering the stocks for their net asset values. And of course, a lot of those newer companies aren't on the Refinitiv list yet. So, you know, we still trading at about 0.71 times NAV, very undervalued compared to the group. And, you know, my kind of in comparison, the Nomad is a little over 1. So, you know, consequently, maybe, you know, also undervalued. And in the major group, the Cisco Gold Royalties, one of our favorites, is also trading at a fairly deep discount to the group. So, you know, that when I talk about that clear path to production, again, just to point out to everybody that, you know, I need to update this slide here to add the gold standard, the railroad to this, as that'll fall into our key assets. But, you know, these all projects that we are looking to be into production by 2023. With railroad, we're using 2024. But you know, look at the list for us of these 11 on this page. 9 of them, the mines are already built. They're at some of Nevada's largest gold mines. They're with some of the best operators in the business. Of the 11, 10 are companies that are already operating mines in their jurisdiction. So, you know, and these numbers that we're looking at as far as production, they're not our numbers. They're their numbers. And again, a very high quality group of companies that make up our portfolio. So that slide is what drives all the gray revenue on this revenue slide for us, going out to here just to 2023. If I was to extend this out, some of the current analysts that have put out reports are clocking us adding on the REN revenue in 2024 and some expansion. And that now with railroad, we're looking at about 24 million in revenue in 2024 and over about 33 million in 2025. So, you know, the nice thing about the royalty business is of course, this doesn't take any management by us. I mean, you could literally, the shareholders could choose to fire all of management, hire a part-time lawyer and a part-time accountant to watch this portfolio. And this is going to happen with or without us. You know, it's these companies that are going to make this happen, not ELY Gold Royalties. So, you know, that's the beauty of the royalty space. We can keep our, you know, keep our costs down. And that's one of the things that you're going to see us do next year. We've talked on here before about, you know, our goals and how we are goal oriented, and that we've talked about, you know, but often we're asked the question about a dividend. And while we think paying a dividend is important, we think being a profitable, we think profitable companies are who should be paying dividends. So our goal next year is to get our promotional costs, which have been, you know, rather high the last 2 years, really get those under control. Do a lot more of these kind of town halls and controlling our exposure rather than paying a lot of money for these virtual shows that just aren't worth the. They're just not the same as the in-person shows as far as the benefits that we see for shareholders. So what you're going to see us focusing on next year is getting our costs down to where most of our royalty revenue starts to fall to the bottom line, to EBITDA. We think we can our sale revenue. These are the contracts we have in place. Of course, we now have 26 properties that are in our sale portfolio where third parties are purchasing those from us on a 4-year option contract. And so we have some falling off as they've matured, the 2017 contracts and 2018 contracts in here. But then with prices escalating on contracts, and of course, we're always adding contracts. I think we've sold 16 properties this year. So, but again, we've seen this slide before, but I just want to point out that, we still are, up over 450% in the last, well, I think this slide goes back to the first part of 2019. So, that slide over over the last 2 years now, but still in a very nice uptrend. And we we really have been, we think, executing on our business model, which where we like to differentiate ourselves is, number one, jurisdiction, staying focused in Nevada and in Canada, where we know the landscape, where we have backup, where we already have lawyers and infrastructure in place, and not chasing royalties all over the globe. Just to, there's just too many pitfalls, we think. And you're adding G&A, these companies, as they're buying in different jurisdictions, because they need legal help, they need accounting help, they have to create a new subsidiary in that jurisdiction. And it just doesn't make it, for us, it makes sense to keep our costs in line and stay focused in a jurisdiction, and also staying focused on gold, precious metals. Always looking for some silver assets, but they're just pretty difficult to find in the royalty space. So, we are pure gold at this point, and not chasing royalties for production in iron ore or copper. And, look, there's some companies that are, taking a battery metal approach, and that's fine. It's just not us. So, but we have executed, we think this year we've done over 17 royalty purchases and over 16 property sales. So it's been a very busy year, and we expect to continue that kind of pace going into next year. Again, I just want to keep focusing a bit on this pullback in the stock. We think it's been very orderly. We think, it's pulled back to all the kind of support lines that you'd want to see in a pullback. It is nothing wrong with us, other than that we probably went up a lot more than other stocks. So on a percentage basis, we have pulled back more. But if you look at a chart of gold, if you look at a chart of most of the mining and most of the royalty companies, those chart patterns are going to be very similar. And I think I didn't get real aggressive on my vote on the price of gold, but I think we are about through with the pullback in gold and in the gold equities. And quite frankly, we had a period here in April, May, June, even since the first of the year, in these equities where it just did get a little too heated. I mean, when you started to see, stocks going up 40, 50% on one or two drill holes, it kind of started to feel awfully frothy to me. So we're still in very good financial position. We'll in the year, probably when we close all of our transactions with that we have on the books right now, we'll close the year with about $4 million in cash, and then our $6 million line of credit, which is fully open at this point, undrawn. So again, we are focusing on buying those royalties at deep discounts to NAV, but we're focusing on long-lived assets. Another point I'll make is that when we look at these producing royalties, not only are they very competitive and people overpaying, but in the, just ask yourself, who sells a producing gold royalty? I mean, that you don't see a lot of people that it generally is a short-lived asset, maybe has some other issues. I mean, I won't say that they're all that way, but they tend to be shorter-lived assets without the kind of blue sky and exploration potential that we like to see in the royalty space. So again, those key assets, we've gone over before, our development assets, and these are all the assets that are at or near producing mines. A lot of work being done on these. We think of at least a half of these royalties will ultimately come into production because they're either part of a resource that is big enough for the mine to be permitted, or it's a mine that's already in existence. So, this portfolio is made up of about half of properties that we have generated and sold and retained the royalty, or in the process of selling, or royalties that we've picked up from third parties. And talk about just quickly some of the new assets on the railroad. For those who didn't really see the presentation on it, we're very excited about this one. The Gold Standard Ventures has a commitment from Orion Partners for $200 million to finance construction of this. We picked up the mineral interests and on the checkerboard in yellow on the right here, and that includes a big portion of the Pinion deposit, all the current drilling and exploration they're doing to the south to add on to this. We think they'll add on about another 500,000 ounces on our claims here. They also just announced last week these holes in here all came in with more near surface 60 meters of 0.6 grams and 29 meters of 0.8 grams, things intercepts like that on these first holes that kind of surround the main dark star pit and are expanding it to the east. And we also think they're going to that there's some very good targets here in the south on our claims. And then all of the jasperoid wash that isn't in the current mine plan, but has about 150,000 ounces outlined so far, and some of their main targets at Bald Mountain and what they call the pod up to the north. So a lot of potential with this one, and very excited. Should be getting that closed here before the first of the year. The other new asset is the Cote. This is one that's a little harder to understand, but this is going to be Nevada's largest gold mine. And while the claims that we purchased this royalty on from Santa Tana are in the light purple, going out on this map, and then the inset here. This is in the area that's in the mine plan. On this map, they're in the dark purple. So the keys to these claims is while there's some great prospecting, a high-grade small deposit that was outlined over here and other exploration in the past, what's going on here now is that the current pit outline is approximately here. And so we have a claim with about 150,000 ounces of higher grade material here. And that's pretty much, it never got much more of that got explored. So they've been up here on this claim drilling with 3 barges during the summer, which is expensive way to explore. But we're pontificating here that what they're doing is trying to more fully outline this resource under Clam Lake, with the idea that by the time they're actually ready to start laying back the pit, that they should possibly be taking this near surface and expanding that pit this way. The transaction that we did on this Cote comes included with it. It's a 1% royalty with a 0.5% buy down for $2 million. We paid $2.5 million for it. And then with it also comes 2 bonus payments that were in the original purchase agreement with IM Gold, and that's 2 payments of $1.5 million. One when they declare a put out a resource report on the deposit on the claims, and 2 a second $1.5 million when they make the or when they start commercial production, which obviously and we think that the worst case is that they will eventually mine this out. This is going to be one of Canada's largest, if not the largest, gold mine, operating 60, 70,000 tons per day, 400 plus thousand ounces a year, and all of this all the resource here and we believe what they're drilling on Clam Lake is all about 50% higher grade than the pit, all very near surface. So when we do the calculation for a NAV on this, while we don't have it in key assets at this time, even if it takes them 10 years to decide then to start mining on here, because we'll get more than our full investment back just through those bonus payments, the numbers pencil out very, very good on this. But we think there's a very good chance that they will expand this pit over the next couple of years as they are building the plant and all the facilities here, which is it would take them another 3 years to build. So we think there's a very good chance that pit will expand and go into our claims. And so we like this project very much. We're actually looking at possibly picking up some other claims in this west area here, but very excited about the Cote project. The story for us, again, as we look at this past year, we started out 2020 with some goals to purchase a minimum of 4 producing or near-term producing royalties. We've actually added 17 royalties, and 6 of them fit into those key asset. We picked up the producing asset at Jarrett Canyon, and added the near-term producing at Lincoln Hill, at Wren, at Marigold, and so we more than covered, met our goal there. We had a goal to add 6 properties to the sale portfolio. We actually added 16. Added brokerage coverage from both Noble and Laurentian Bank. You had a very successful brokered private placement in May, raised $17.5 million. And so kind of looking out here, as I mentioned before, for 2021, we haven't set all of our goals yet here, but the number one goal I can tell you is going to be that we're going to be profitable, and that as you go into next year and this market turns around, people are going to look at the market's going to look at that undervalued assets that we have, the quality of the assets, and where we think we'll continue to differentiate ourselves from the other junior royalty companies with our jurisdictional and gold focus, which we think makes a lot of sense. What we will be able to say is that we are going to be the most profitable of the junior royalty companies. So, I'm going to leave it at that. I mean, we can back up and talk about some of these other things. There's a lot of exciting things going on at Isabella Pearl with drilling. I want to leave plenty of time here for John to jump back on and us to get through questions today, because that is really was the purpose of this. And just to let everybody know, look, we've had a great year. We've had great performance. It's been a tough end of the year, but we think now is the time to be adding to your positions, and that we once again will be looked at going into next year with doing doing more transactions, and we think that performance, we're poised to really outperform on a price basis again.
All right. Well, thanks, Trey. And I see everyone. Thank you for those who submitted questions already. There's some good ones in there. If you still haven't submitted your question, you can throw it in there at any point. If someone's asked again, if somebody has asked something that you wanted to ask, you can just upvote their question. If Trey gives you an answer to your question and you have a follow up, again, don't be shy to put your answer in there. And Trey, probably no surprise here in our gold audience, but over 80% think gold in the next 3 months is either significantly higher or slightly higher than where it is now. I think slightly higher was the most popular. So I guess we'll see the next time we do our town hall with you. We'll see who's right.
Let me make one comment on that, because I meant to really mention it, and I was hoping to have a chance to put up a chart of gold. But I want to point out something to everybody that I believe to be pandemic related. And I think it's something that has really pressured the price of gold in here. And while I think we're getting close to a bottom here, I'm not sure, that couldn't see 1700 before the worst is over. But in the second quarter, for the first time in over a dozen years, on whole, the central banks were net sellers of gold. Now, in a quarter, generally, you have a low quarter would be 100 tons up to 300 to 400 tons purchased by central banks in a quarter. And you had countries like Turkey, Russia, Kazakhstan, I think I'm saying that right. But anyway, a very interesting list, and we believe that it was more pandemic related, that they were needing, they didn't have the revenue coming in, and they needed to prop up their economies like we have, and in some of those countries, maybe a little more not as easy for them to print rubles and distribute them out. So the Russians did dip into their gold a bit and were net sellers. So I believe that probably did not change in the third and fourth quarters. But that's something that for everybody out there that's watching is to keep track of that and keep an eye on that. I think you will see when the next time when this pandemic ends and we have the vaccine, and I think that these central banks that have been sellers will replenish their gold supplies and be a big supporter of the price.
Okay, well, that was a good segue, Trey. Interesting. So I'll start with the first question, or the most popular one. It's from Frank. And he's asking, in your 2021 outlook, you expect to receive more than $2 million from Wallbridge. What are you basing this on?
Well, we've talked about this before. Is that we think that that as soon well, first of all, Wallbridge has stated that that they have applied for a small miner's permit. And they have the mine infrastructure in place at Fenelon. And when they did the bulk sample in 2018, 2019, they mined down to 6 levels. They didn't mine everything up in here, these stopes. They really their goal was to mine as much as they could, but really to get down to this 6th level to where they could do the definition drilling on this main gabbro zone in here by drilling 50 to 100 meter holes as they're defining that. And that's what they've been doing here. Now, the big holes they hit, and where Mars is, Wallbridge is kind of talking, and depending on the analysts, they've started to outline about 2 to 4 million ounces down in here. Obviously a big thick zone here, this Tabasco zone, but these are 600 to 800-meter holes here from surface. So what you're going to see them do as soon as they get their permit is, and we've been saying this all year, is will mine down through the main gabbro zone and mine down another 6 or 8 levels and get out here so that they can definition drill this to and define it at depth. And then they can make a decent on-site mill decision. They hauled everything from the bulk sample, and they will haul from their small mining permit to the CamFlow mill. And but this deposit clearly is going to have a mine on or mill on site, and they need to define this and come up with a real obvious plan, because it's going to be a fairly large capex for them to define, and they don't know. I mean, will this be 1,000 ton a day, 2,000 ton a day, maybe 3,000 ton a day, just depending on what they're seeing in the rest of the district, but mainly right here. So we've been saying this all year. I've admitted that I was about sticking my neck out a little bit, but anybody who now listens to Walbridge is now starting to talk about this publicly. So they expected that permit to come by the mid-year. It's been COVID delayed, and so we think they could get it at any time. Obviously, we're running out of time here, so we may be pushing having to push our number back out a little bit next year. But they are ready. They will. They're drilling from here. This infrastructure is in place. They've shown that they can mine and build infrastructure and put the faces together pretty quickly. This main gabbro zone is going to be very easy to mine. These nice vertical faces or vertical structures. I mean, they're a bitch to drill at depth because you have to keep stepping out. I mean, they'd about have to get into Ontario to drill this much deeper. And but it's great to mine because you have these verticals and you get down underneath it and mine from and let gravity help you mine. So I think if you check with Walbridge, you'll see that they're now telling this story as well.
Okay, and Frank, that was a very detailed answer for you. I hope that answers your question. The next question: what are ELY's 2021 goals, since we are approaching 2021 soon?
Well, like I said, our main goal for 2021 is profitability. So we're working right now on our budget for next year. We're making a commitment with the Follow the Money guys to focus on doing these type of town halls. I think we had we spend at these shows, which are all now virtual, and where we were traveling around the world, to Zurich and to London and PDAC and Vancouver and just all around the world to do these shows, very expensive. So one of the things with next year, pretty much everybody has committed at this point to virtual shows, and we just don't see much value in them. I mean, those shows, 50% of the meetings, the best meetings you have at those shows are meetings you don't plan. So we're going to do more of this on our own with town halls. As most of you know who ever even tried to pick up the phone, and my phone number is on every press release. My email is on every press release, as is Joanne's. We're very accessible. So our institutional holders and even our retail holders can pick up the phone and ask us questions. I'm probably as accessible as CEO as there is in the business, and so we are going to cut way back on our budget and work on profitability. If we start to see later in the year or next year, as this royalty the new royalty revenue from Rawhide and Fenelon comes on stream, we could look at dividends. But other than that, I think you're going to see us, stick to our knitting. We're going to stay within our jurisdictional focus. If we do add a jurisdiction, it will be very strategic. I can tell everybody that one of our goals for next year would be to possibly expand into a third jurisdiction. And if we do that, we've identified Brazil as a place where we have a lot of good contacts. We already have legal help there. We have some good strategic advisors on the ground there that some people we've known for years and done business with in Nevada and in Canada. So, and most importantly, Brazil, we see a tremendous amount of development projects on the horizon there. And so that would be an area that, that would be one of our goals next year is to strategically expand jurisdiction and looking for opportunities in Brazil. But other than that, I think you're looking at more of the same. We haven't put exact numbers like we did this year out there yet, but by the first of the year, I think we'll have some more specific number goals. But we seem to blow through those so fast. I think it's we're not sure it's that the market is looking for a number of how many properties that we think we'll sell next year, how many royalties we think we'll buy. The market knows we're as active as anybody, and we're more disciplined than most. Well, what we did is ELE is so new that they were not on the Refinitiv list. So the ELE, we know those guys pretty well. They just made a great acquisition. I mean, they're a great company, and quite frankly, if I think that they would probably look about the same of us on a net asset basis. Their focus is a little different. Again, looking at producing royalties, but this South 32 thing they did is a great acquisition. And EMX is just again a company, probably one of the only other companies in the gold royalty space that has a royalty generation model like we do, and had a very successful transaction this year where they sold a property but I think that if you looked at EMX, the other problem that most analysts have with EMX is that a lot of their foreign assets are hard to evaluate. So, we'll be looking at updating that list to going in, and again, we're not trying to eliminate anybody who might might not make us look as cheap. It's just if they are on that Refinitiv list or not, and we certainly will be adding ELE and maybe Vox and some of those smaller ones, but we're really aspiring towards those larger companies. So it's not a purposeful omission. Both great companies, and EMX has had great success this year. We like both those companies a lot.
Okay. The next question, did you have any opportunity to acquire the Genesis and Geological portfolio that Metalla obtained?
Yeah, we know those guys very well. In fact, in 2013, when before we went to the royalty model, when we purchased the Green Springs asset, the Genesis guys were the underlying royalty holders there on the Green Springs property. We've known those guys for years. They've tried to sell us that portfolio. And quite frankly, look, we don't buy exploration royalties. We get paid to create those kind of royalties. And if you look at that portfolio, And I would say, um, well, let me get back here to where I can navigate this. The only royalty that we really like in that whole portfolio, as far as a royalty, is the Green Springs, which is our project. We own it. We have it optioned out to uh, to Contact Gold, and they're paying us $2.5 million over 4 years to purchase that property and leave us with the royalty. So that's one of the things that having the royalty generation model really helps us stay disciplined and not buy those type of well, lottery ticket royalties, if you will. I mean, you look at, I won't even go into our development assets, which are better, because I think all of those would fall in the exploration, which is where we have Green Springs. Like I said, we're getting paid on that. We have a couple of royalties on Green Springs. There is a project in that portfolio that is leased and has a fairly nice lease or advance royalty payment from Barrick. Barrick's not really doing any work on it. There's no resources on the project, but it is a nice lease payment. And and of course, we picked up 3 of those kind of projects in the VEK transaction, along with the Ren and Marigold. So you look at a project like Tonopah West. We consolidated that property package. So they're having very good success with it. Sold it to BlackRock for $3 million. They'll be paying us $325,000 again next year, $750 the year after that. We kept a 3% royalty on it. At the VR Resources, their Big 10 project, we sold them that project and kept a 3% royalty. So you kind of go through the list here, and I think that probably most of the royalties in that 9 royalty package, they're not really with top held by top companies now. I'm not sure how many are being drilled, but like I said, we don't purchase exploration royalties. We get paid to create exploration royalties.
Okay. Next question is from Mark Reichman, analyst at Noble Capital Markets. Trey, would you give a rundown on transactions remaining to close and when they will close? Thoughts on Bitcoin and other speculative vehicles impacting junior gold investment space, and how you think or your thoughts about keeping the share count tight?
Boy, a lot of questions here. Okay, I'll start with Bitcoin and answer that because that's the easiest one. I have absolutely no opinion about Bitcoin and whether it impacts gold purchasers or gold equity companies. I again have no idea. But and backing in then with the share count, I mean we tend to use our stock where we can. As far we've only done one, had to do one equity raise this year, and where we issued about 20 million shares. So with a half a warrant, those half warrants are at $1.60. So we've got and we've got some other warrants out there that will be coming in at current prices and higher. We tend to use the warrants as a kicker, and we've gotten to have a reputation with some of the old time prospectors and people, the sellers of royalties in Nevada. They all know each other, and some of those early people have done very well with their warrants and like that, and tell their friends, and then their friends call us and sell us the royalties if we'll give them some options or some warrants along with it. We kind of look at the warrants as they're issued at the price at the time, and generally the warrants, when and if they're exercised, pay for the transaction that we did. So it it's a real balancing act with, if we see opportunities out there, and to keep growing the company, we likely will be back in the market again next year if we don't do some other type of transaction. But to shore up our cash position and have it ready, you really have to have the cash and the line of credit we will have. You have to have it on the balance sheet when you are talking to people about royalty purchases. They don't, they don't like to have them be contingent on you having to go and raise the money. So, but we feel like as long as we stay disciplined and we are buying properties, royalties, and again, we're not buying expiration royalties, only royalties that we can put a NAV on, or that we think are very close to putting a NAV on, and buying them at a deep discount. So we, to the extent we do have to go and raise dollars, we we think that we are still doing accretive transactions.
Okay.
Oh, he wanted to on the closings.
Yeah.
So we're finishing up the paperwork now on the gold standard. We expect that will close before year end. We're actually waiting on Coeur to finish up the paperwork to close on the second half of the Lincoln Hill. So that will close before year end. And the Trenton Canyon we expect to close next week. The Sleeper royalty, we're having a bit of an issue there with the partner on the other side of that royalty. So it's possible that one could drag on, although it's a pretty small piece of the transaction. Of that Ken Snyder group, we did close the other two royalties. We're just a bit having a bit of problem from the guys in Europe of getting them to sign the paperwork on that. But and then the last one, Santana, we should be closing. That would be the Cote. We'll be closing that next week. We did get notice from IM Gold on that one that they are not exercising the ROFR, and so we'll be closing that next week. So kind of, I'm staying close to home here in December, Mark, and I'm that's I've got we've got some things some paperwork to get done and get closed, but none of our transactions ever seem to be easy. The gold standard is, I think, 14. It's up to 14 different individuals. They all have separate leases. They all have separate deeds to their mineral rights, and so it's that one's a bit like herding cats, but we've pretty much got on top of it at this point.
Okay. Mark just answered. Excellent, Trey. Thank you. The next question: how do you foresee G&A for 2021?
Well, like I said, our goal is to be profitable. So I think we can get our G&A, keep our G&A between 2 and about 2.5 million to 3 million. We'd like to keep as close as possible to our sale revenue, being what covers the G&A. So like I said, I think you're going to see us be a lot more focused on doing our own town halls and cutting that show budget way back. These shows cost $10,000-$12,000 a piece, and we've had the benefit this year of not having travel expense, but still that show expense is very high, and it just doesn't seem to be as valuable as being able to do this, on a regular basis with the follow the money guys. So we think we can get G&A down. That's I would be doing that specifically for Rick Rule.
Okay. So Trey, I'm going to combine. There's three questions, and I think they're all kind of along the same tack. So Shane, Michael, and James. Shane's asking for updates on the NYSE listing, and sort of on the same tack, Michael and James are asking about reverse stock splits to help qualify for the listing and/or to help the stock be more widely traded in retirement investment accounts. Any thoughts on that?
Definitely a goal for next year. We are just finishing up our what's called our annual information form. And what we had to do is because of the REN being a key asset, they required us to put out a 43101 on that. So we should be filing a 43101 on REN here in the next week or so, and that'll allow us to have the AIF, which will put us in a position to do, if we do our next private placement, would be a prospectus type of offering. As far as the listing, that would require a reverse split to get the stock price up, and we think that that is very valuable to, for the liquidity. We think that that's a big reason that Metalla trades at a large premium on a net asset value basis to ELY Gold Royalties. So I think one way or another, you'll be seeing us move towards that. I mean, we are always on the hunt for potential to do something that's more transformative of a transaction, and that would be the ideal time to do something like that. But but we can't. We have to also be on a path to do it to do it ourselves. So I think I kind of dropped that in the goals for next year, but I think that when you see us that we can officially add that to the list of the goals next year, is working towards that NYSE American listing, which would require a reverse stock split.
Okay. There's a question here from Steven. He's asking, can you give us an update on the Rawhide and Fenelon streams for 2020 and 2021? And Trey, I think you've kind of already addressed Fenelon, but he's asking about Rawhide, and also any word on how close Nevada Gold Mines is getting to the Ren royalty area. And perhaps a follow-up on that as well. There's another question from Keelan. Is your outlook on Ren property intact per the last town hall sharing?
Well, let me start with Rawhide. Rawhide has been mining on our claims for about a year now. And when we purchased that net profit interest from Liberty and Rawhide were in a squabble, let's say, as to how to figure the net profit interest. And so, we actually came in as kind of a arbitrator, and we're willing to do the deal with Liberty to take that over. And at the same time, we had a good relationship with the people at Rawhide, and had been talking to them about some other royalty transactions and stuff. So we have a good relationship with those guys, and they are just now finishing up their financials. It looks like at these higher gold prices, they've probably moved ahead, but we expect that the costs and the recoveries that they're going to use and all that have basically been negotiated, so that we expect. I talked to them. It's probably been about 10 days ago, finishing up their financials, and when they have those finished up, we'll have a firm look at when that will start. But we know that they are, if not there, right at having recovered all the agreed upon development costs to begin paying on the net profit interest. On REN, REN is just simply, we're not we're not just on track for Ren. We're it's probably way ahead of what we thought, what we were thinking. And while we think there's still a chance that we could purchase more of the royalties from our partners at Ren. So we are, we did not do a site visit and do a full update for the 43101, but we're going to get that 43101 out. They were restricted bear by Barrick in doing a site visit because of COVID, and now they've kind of opened that back up. And Jerry did a site visit the other day, week before last, and it ends up that they're not just starting to drift in. They have drifted in about 3,000 feet, so they're just south of the JB zone, and they're at about 16. They're drifting at about the 16 to 1700 foot level. So they're going to come in above the JB zone. Probably, so when they get to there and start working down, I mean, these guys, they've been underground mining here a long time. Obviously, it's one of the biggest gold mines in the world, and 15 million ounces came out of right up in here. So we're not sure that we're pretty sure it's going to be more than 2 million ounces. I think I've talked about this before. When this JB zone was outlined in 2005 to 2011 by Cameco and then Centerra when they spun it off, and Barrick in a joint venture, the discovery hole was up here in what they call the 24 zone. And that's it right here in this picture, 42.7 meters of 34.6 grams. They stepped out to the southeast and just kept stepping out with holes similar to that, and outlined this 2 million ounces here. And then they ended up in 2012 selling their joint venture interest back to Barrick, who has pretty much sat on the property since then. So this hole's never been stepped out, up to the north along or east or west, really. Now what's happened is, in coming in here, I don't know if it was from surface for underground, but you'll hear Barrick in their quarterly reports is now talking about a new zone they've discovered over here in the southeast corner called the sinkhole. They're calling it the sinkhole zone. We haven't gotten much more data on that yet. They've also done, as they were drifting in, they set up stations and have been drilling up towards surface and out in all directions, and have hit some significant intercepts along the way. So the fact that they've, we had heard that, that they were, and talking about that they were getting ready to drift into the property, but they're far advanced there, and we think that Ren, as I've said before here, I have a standing bet with Eric Sprott that more gold will be mined from Ren than Fenelon, and it's a bet that I win either way. So we're very excited about Ren, and it couldn't, it's a home run. It's a company maker for us, we think.
Okay, so next question is talking about the Cote project. Does the 150,000 ounces, the Cote project IAMGOLD, refer to an annual maximum? Does this continue year after year for the life of the mine?
Okay. Let me get to Cote here, back to the map. I'm not sure. So the Santana, what they're talking about is their drilling was done on some of the claims at Cote, the ones that I showed you near the pit there. And so on this claim right here, they outlined about 150,000 ounces near surface that they did not include in this first pit model. That's the only drilling that really got done there. This property was in basically arbitration between Santana and IM Gold. I don't know if that had something to do with that, but I think, when you're dealing in projects this big, I mean, you kind of, in your permitting process, you kind of have to draw a line in the sand and say, okay, here's where we're going to stop the pit, and we're and then they can build a mine plan and a plant and everything based, the whole bankable feasibility study. If you have to draw a line in the sand to get to all those numbers. So that's what they've done there. However, now that they've got that plan, they are looking at expanding this. So they had done some drilling here, and this is at surface, 150,000 ounces. The grade is about 1.3 grams versus about 0.95 grams for the balance for the pit here. And then they never drilled any further to these are patented claims here that aren't included in our package, but this whole Clam Lake area never really got any more exploration. They kind of stopped drilling. This is just where they stopped drilling onto this claim. Now they've come back and they've got 3 drill rigs working out here. We think that they're looking to expand this whole area with more near surface high grade. And it would make sense for them because with it coming to surface, it's not going to require them to do much strip. So the 150,000 is just resources that to date have been outlined on this claim. It's not an annual thing of production or anything like that. On this Cote project, to be clear, we don't have it in key assets, and the reason is it's not in the mine plan. This is expansion ground. We're thinking it possibly could be in the mine plan before they actually start mining, if they decide to extend this pit out and make this, start with a bigger pit. Obviously, when you're doing a 60 to 70,000 ton a year mine, I mean, they already have about 5-6 million ounces outlined in here. But to start a pit, and then, I mean, if you want to, when you start that pit, you want to make it as big as possible. They also have these lakes up in here are beaver lakes, beaver ponds. They're only 6-8 feet deep at the deepest parts, and so they actually the long-term plan is to drain off these lakes, and then in the end, the pit obviously will become, once they reclaim it, will become one big real lake. So the idea that they would want to expand that pit earlier in the mine life makes sense to us. But regardless, they eventually will mine that, and when they do, we get paid back all of our money up front, and then have the royalty.
Okay, Peter, I hope that answered your question. The next one's from Phil Trey. He's asking, how do you view the risks of Nevada becoming very active in excessively taxing the mining sector?
Well, first of all, for Nevada to change the taxes, it can't be done by the governor. It can't be done by the legislature. It is the mining tax, which is currently 5% in Nevada, has to be changed on the ballot. It's got to be an amendment to the state constitution. Now, there has been one that has been recommended. It actually applies a different way. Right now, we're taxed on our royalty positions just like a producer at 5%. Off the top goes to the state, and that doesn't matter. It's just a top line tax. What they're talking about now is some type of a net profit tax, which, typical of Democrats, it's much more complicated. And, in the end, it may or may not cost more money. Probably at the royalty stage, I don't think. I mean, I've heard some of the producers talking and saying they're crazy. They're better off just taking 5% off the top than, than trying to work off a higher tax off the bottom line. But this isn't something that'll be done easily. It's been proposed. It would have to go on the ballot, and it would have to be approved by the populace.
Okay. There was a question that came in privately, Trey. For what it's worth, it seems that the delta between shares out and fully diluted is a concern for some investors regarding potential dilution. Can you address how you would keep the share count tight with respect to that question?
Well, look, for the most part, I don't think that the market really thinks, really feels or should feel that way. I think 90%, it might be between 80 and 90% of our warrants outstanding are all in the money. So we look at them as being dilutive anyway. I think and certainly, there's a big slug of warrants that Eric has at 62 cents, which are tied to the line of credit, which will be exercised one way or another by at the end of next year, November of next year. There's still a few lower priced warrants out there, not too many. A lot of those have been exercised, and we see them, kind of floating in. And then, of course, we have the 10 million, well, it's 20 million half warrants from the private placement at $1, that we can advance those if the stock trades above $1.60. So in a better market, we could bring that $10 million in. But I think, when we do, as I said earlier, we use the warrants as incentive to get some of these royalty deals done. And when you look at the kind of prices that we buy some of these royalties for, using the warrants as an incentive we think is certainly worth it as far as attracting the sellers to us. And then secondly, as I said, we kind of look at it at the time that the warrants are issued at the market, always at the market. We don't do warrants at a discount ever for when we're adding them to the cost of the price of a project. And we kind of look at them that they either pay for the project or pay our purchase price back, so that we're in essence kind of financing that purchase when we do it, and long term that money comes in. So I think the way to look at us is we have 199 million fully diluted, and pretty much everything's in the money. So that's where we are. That's, call that. And I think if everything were exercised, it would bring 22 million into the treasury. And I think the market realized once everything's in the money that we pretty much quote ourselves on a fully diluted basis as far as our NAV and that type of thing. And unless we're comparing ourselves to, in the case of the Refinitiv chart, something that's on a not a fully diluted basis for the comparables.
Okay. We have 3 questions left. I'm probably going to cut it off here because we're at about an hour and 10 minutes, but we will get to these last 3. Next question. You mentioned Isabella Pearl with Goro. I own both companies. And while the Pearl is mainly an oxide mine, they have seen some pretty interesting drill results as they move into the sulfide ores. Do you think they will end up mining this ore? I agree that the recent drill results look good.
They are on record as saying no, that they don't intend to ever build a mill. And, look, I think they would have to have grades. The only mill that is available to, and it depends on if that sulfide ore that they're seeing is refractory, and generally it is. There, if it's not, there's a possibility that they could take it and leach it over at the Hawthorne Mill, which is nearby. Hecla owns that now. So that would depend on recovery. But the idea of them building a mill there, I think, is a 10-year process, and it doesn't seem to be in their DNA to want to do that. So consequently, what we think you'll see them do is expand Isabella Pearl through exploration onto our claims. If again, through our project development, royalty generation, we staked all of this ground in blue. We sold that to them shortly after they bought Isabella Pearl. We then, from a third party, purchased our producing royalty there. But we have a 2.5% royalty on all the blue ground. So everything, even some of the stuff out at the edge of the pit that they're drilling now, but all of what they call Civic Cat and some of these other targets, the Scarlet, everything they drill out there is going to be on our ground at 2.5. And then, of course, we also consolidated both the Mina Gold and County Line projects and sold them to them here over the last few years. You talk about a royalty generation model as far as Gold Resource goes. I think they've paid us close to $2 million that we've in properties that we got paid from them to generate the royalties here on all the ground at the expansion ground at Isabella Pearl, the Mina Gold. We've talked about this in the past. Mina Gold has about 100,000 ounces, historic ounces that are between 2 and 3 grams, and County Line has about 50,000 ounces historic. These are both left in the bottom of the old pits, and that's 3 to 4 gram material. So I think what you'll see as they do their spin-off and they have the cash flow from Isabella Pearl, I think you'll see them focusing a lot more on these satellite projects and more where these are both at surface oxide material. So I think you'll see them growing these assets, this is such a prolific trend here that's never been really, have the historic Santa Fe deposit and other deposits that are were satellites to the Santa Fe mine that produced over a couple million ounces. And you have the same thing here to the north with, just targets all the way up for 6 miles on trend there. So I think you'll see them focus more on expanding oxide resources. And that's great for us because we've got nice royalties on all that potential oxide material.
Okay. Nice detailed answer there for you, Rex. I'm assuming that answered your question. The next question revolves around share price. It's being asked by Tony. I'm going to throw up a poll just because it's kind of relevant talking about the share price. But Tony is asking, Trey, if ELY stock price is undervalued, would you buy back ELY stock instead of paying a dividend? And in this, I'm going to throw in a couple comments from the chat section. John Schmidt was saying he would rather see ELY invest their cash flows into buying more royalties than paying out dividends. And Wayne said, totally agree with John. Forget about dividends at this point. It's too much money becomes an issue. We'd like to see you buy back shares. So with all that in mind, I'll leave it up to you, Trey, to answer Tony's question.
Well, here, let me click here. I've been a buyer at these levels. Okay. Look, this is a question that yeah, I just don't think you can answer on. It's like if I had to do it today, uh, said at this price, would I? Uh, if even though we are trading at 0.7, 0.8 times NAV, if we can still buy royalties, I mean, look at some of the prices we paid for. I mean, in the REN, I think we paid maybe 0.2 times NAV for that asset. Marigold, about the same thing. Maybe paid a little bit. Maybe we're figuring about 0.4 times for gold, the gold standard royalty. As long as we can still make accretive transactions like that, and you have to the stock buyback is it's kind of a nice option, but like I said, we have to have the cash and the line of credit availability on the balance sheet to make royalty acquisitions. So it's kind of tough to use the cash and then just have to go borrow it again. I mean, there are costs to borrowing as royalty opportunities come along. So and when you look at what our growth curve is looking like as far as royalties coming on stream, but we think next year we certainly we would be self-funded. That there with all other things being equal, I mean, and we think we'll be able to make some smaller some more of these smaller royalty acquisitions without going back to the market, because we will be cash flow positive. If the market were to get worse in here, we're in a good position with revenue and able to cut our costs back. A dividend program, I tend to agree with those. It's like everybody says, well, a royalty company should be paying a dividend, and we think longer term that is the truth. But the royalty companies aren't really great dividend payers. I mean, Franco-Nevada's got a ton of cash. When do they pay 1% dividend? I mean, they should probably be paying if dividend company or if royalty companies were really big dividend payers, then these ones generating tons of cash like Franco and would be paying much higher dividends. So keep in mind that for a small company, dividend program is expensive. So the first $500,000 or so is just goes to pretty much to operate the dividend program, and so these are decisions that we'll be making as on an annual basis as we see what's going on in the market. And if for us to if we started seeing the kind of cash flow coming in that we think we will next year and the year after, and the stock is languishing, well, a stock buyback might make more sense than a royalty. If we continue to see royalty opportunities at big discounts, and then that's really the way to build the company for the long term for the shareholders. Not to pretend to be a much larger company where you have tons of cash flow, and that buying back stock is a way of kind of just that's your way of generating earnings growth. I don't invest in stocks that myself that are just buying back stock to generate earnings growth. I'd rather invest in companies that are investing my money for growth. So anyway, I can't really answer the question today, but I think it's one that hopefully we'll be in a position where we're making those kind of decisions next year.
Okay, and Trey, there was a question I missed. It was from Oz, and it's kind of along the lines of what you just talked about. You might have already covered it partially, but Oz is asking, how much cash do you have available for 2021 deals?
Well, by the time we close, I think I mentioned it, by the time we close all the transactions we have on the table right now, we'll have about 2.5 million in cash and the line of credit. Keeping in mind that our line of credit is backed by an equal amount of warrants from Eric, so we can that comes due in November 2021, and even if we were fully drawn on that line of credit, the warrants would be exercised, be force exercised, and would cover the debt. So it's not like it's a debt that is coming due. So for that, it kind of goes back to the dilution question that somebody else had too, is that in that exercise proceeds and the 198 million fully diluted shares is a slug of about 10 million warrants to Eric to pay off that line of credit. And so that's financing that in essence we've already done in the market. We just have it structured in a way that that we can pay it down and then redraw on it.
Okay. And the last question is from Jacques. Is the potential increase in royalty interest at REN a near-term or medium-term target?
Repeat that question again.
Is the potential increase in royalty interest at REN a near-term or medium-term target?
I think it would have to be a near-term target because to the extent it could happen, I think with as exciting of things that are going on at REN, it's either going to cost us, if we're going to get it done, we're going to have to get it done sooner rather than later. And, we don't really see the other side as being an anxious seller at this point, but I would say it's near term or then probably not going to happen.
Okay, well, I think that wraps up the Q&A for today. We've gone about an hour and 20 minutes, so it's all good to see lots of questions here, some good questions from the audience, and we hope your question was answered. If you would like a follow-up discussion with Trey or Joanne, when we end this webinar, there will be a survey. We always like it if you can tell us, how you thought of the town hall. But there is a question there that asks you, would you like management to contact you? If you answer yes, we do provide those names to Trey. And Trey and Joanne will arrange to get in touch with you, and you can have a follow-up discussion on that. So with that, I think we'll cut it off here. So again, thank you everyone for your participation and your interest. We hope for all our US friends, we hope you had a very good and safe Thanksgiving. And until next time, stay tuned for the next town hall in the not too distant future. But in the meantime, everyone stay safe.
All right. And I just want to say thanks to everybody for tuning in today. And I hope we got your questions answered. And I appreciate all our shareholders, and want to continue to get these deals closed that we have on the table here, and enter 2021 hopefully poised for another nice run in the stock, and some some exciting new transactions.
Yeah, and on that stock question, Trey, just so everyone knows the results of the poll, about half of the people who responded are just kind of holding for now, but almost 40% have been buyers at these levels. So there have been people kind of scooping. Obviously, they feel shares are at a bit of a discount and they've been buying. So that's interesting to see. So anyway, thank you everybody for joining us. Appreciate all the questions and the engagement, and we will see you again soon. Take care.